Hello friends, welcome back. Today we'll be looking into BlackRock Flexi Cap Fund. This is the new fund which will be launched by Jio BlackRock. They have just recently got the approval from SEBI to launch it. The launch dates are yet, like the NFO launch dates are yet to be announced, but this will be the first actively managed funds by Jio BlackRock Mutual Fund. So this is coming in a combination of Jio and BlackRock as a organization, and it is an open-ended equity scheme fund which will be launched in due course. This will be a kind of first fund to enter the market in kind of a active equity management strategy from the new fund house. Previously they have launched all the passive funds. Now this will be the first actively managed funds. They have recently got the approval. The primary objective of this fund will be to generate long-term appreciation by investing in equity instruments and across the large cap, mid cap and small cap stocks along with debt instruments. Let's look at the key features. So the investment strategy will be active management, as I said earlier, and a systematic stock selection approach for portfolio construction. This will incorporate fund managers' inputs along with the data that will be derived from BlackRock through big data, machine learning, and advanced analytics. The strategy will allow proactive response to market changes and opportunities, focusing on the Nifty 500 universe. The research will be powered by Aladdin. Aladdin is the application used by BlackRock. Actually, Aladdin captures the data from multiple organizations. Aladdin actually is powered by AI. So using this AI data analytics, the research scores will be provided to the fund manager, and accordingly fund manager has to take the call how to invest, where to invest, what is the time to invest. This will bring institutional grade technology to retail investors. This is the first time which is happening, and it will enhance the efficiency and returns as well. The asset allocation for this fund will be around 65 to 100% in the equity and equity related instruments. Debt and money market instruments will be around 35%. They can also invest in REITs and NVITs, that will be around 10%. The benchmark for this fund will be Nifty 500 index. As of now, they only have a direct fund, a direct growth fund, and additional options will be introduced later. The minimum investment is 500 to start with. The maximum they have not announced it. Exit load is none. This is good part, wherein like in other mutual funds or in other funds, if you withdraw the money earlier than month, then they charge somewhere around 1% of a exit load, but they will not be charging any. The expense ratio is not mentioned yet, but hopefully this will be lesser than all the other funds which are available in the market in the same category. Fund managers for this fund will be Tanvi Kacheria and Sahil Chaudhary. This will be suitable for a long-term investment, and it will have a diversified equity portfolio. Combining Jio's vast distribution network and then BlackRock's global expertise, it will really make investment accessible and efficient, and I believe the returns will be very good. Let's look at some advantages. So as we discussed earlier, this will have a tech first approach, and the focus is to have provide a very low cost. The advanced technology integration, like Aladdin will use AI, machine learning, big data analytics, and provide insights and superior risk analytics. It will optimize your portfolio and provide consistent return, and this gets edge over the other traditional funds. Cost efficient and digital first. So as we know, like Jio already has a My Jio app which has around 45 million users. So this is already it will already reach that users, because you can invest through My Jio app, and that's where like they don't have to invest any kind of a new platform altogether. They already are reaching the end users, and the minimum investment is just 500 rupees. So it's a direct consumer model wherein they can invest directly, eliminating any distributors or any other middleman in between. The digital model could lead to lower expense ratios over the time and reducing the operational cost. Flexibility and diversification. So the fund manager will have a freedom to allocate across market cap and allows adoption to market conditions. Looking at the market condition, they can reduce the exposure in the sectors accordingly. It has a strong backing of Jio. As I said earlier, it has already 450 million Jio users, and then when we combine it with BlackRock expertise, it could really disrupt the market, and they can have a very innovative long-term strategies for wealth creation. Overall, since it's a tech-driven strategy, the tech-savvy investors will look into it, like that will really attract them with a modern and efficient equity exposure. Let's also look at risk. As an equity focused fund, it carries inherent risk, typically the category and some amplified by its newness and tech reliance. So performance dependency. Majorly like if we are looking at a mutual fund which is other than the index fund, we look at the alpha. Alpha is nothing but what index fund is delivering and what my fund is delivering. So if index fund is delivering 12% and this fund is delivering 18%, the gap of 6% is the alpha. So we'll have to look at it, what alpha is generated by this fund, since it will be using institution grade tools which may and may not suffice without consistent performance. Competitive market, that there are already multiple mutual fund houses, very strong mutual fund houses which are already in the market like HDFC, SBI, Axis, ICICI, and also digital players like Grow and Zerodha. So they will also face the competition. Low margin pressures. Since their USP is offering low cost, the margin pressure may come in. Then margins may challenge sustainability if not balanced with scale and performance. Building trust and visibility. Since this will be new fund house which will be launching, the brand is of the Jio and BlackRock brand is already known, so this will help. But the credibility of these fund managers is not known, and long-term investor trust will be the key for this retention. Regulatory and data risk. Navigation localized data, like they will be using BlackRock's Aladdin, and there will be regulatory policies which will come in picture because like the investor data will be shared to a global platform, so they'll have these kind of challenges on that side as well. If the investors are considering to invest, then it will be good if they invest 5+ years or more and have a high risk tolerance. Diversification across funds is recommended to mitigate these. Let's look at the peers which are in the same category. So there are around 41 funds being managed around 1.9 lakh crores in AUM as of 2025. Jio BlackRock will enter as a newcomer, and there are already top performing funds based on the data what we have. So let's look at the below table to see like how the other funds are performing. So looking at the top ones, Parikh, it's a flexible allocation fund. It has around 80,000 crores asset under management, and generally in the 10 years annualized return is anywhere between 18 to 20%. Similarly, HDFC Flexi Cap Fund, this is similar to Parikh. It has the same AUM and it also provides a good around 16 to 18% return. GM Flexi Cap Fund, this aggressively invests in mid and small cap funds. It has a high return but it's volatile, and the AUM is low. It is only 6,000 crores, so it carries a risk as well. if multiple people redeem at the same time, then it will face a challenge for the fund house. Quant Flexi Cap Fund, it's also good fund. I didn't have the AUM, latest AUM. That's the reason I have not specified it. But it provides a return of 21%. Similarly, Axis, Canara Bank, Bank of India, these are the other peers what are available in the market, and they provide anywhere between 15 to 18% as a return. So as we have seen, or the other peers, any fund provides, if we are looking at a long 10 years return performance, they provide anywhere between 16 to 21% annualized return, and BlackRock has to outperform this. The main difference is BlackRock will have Aladdin, which will provide insights when to invest, how to invest, what are the right sectors to invest, and can dominate. Friends, if you feel this information was helpful for you and this has helped you, then kindly share my video with your friends and family. And thank you for watching. Have a good day.